Hey everyone, hope you're doing well. Today's Monday, September 8th, and doing a New York Stock Exchange open. This is pre-market open here, just doing my markups on a higher time frame, the 15 minutes. I like to look at the 15-minute for sure. Mark the previous day high, Asia high, London low, any unmitigated fair value gaps, that type of thing. They just are easy to mark up now so that when price starts moving really quickly, at least they're already there. You don't have to scroll and switch time frames to try to figure things out. Um, just, kind of marking out how I believe price will manipulate and unfold during the first, half hour. That's all I'm doing right here. Okay, and so this gray box here that's printing, that's just an indicator that just shows, a time period, and it's the first 5 minutes of the opening range. So the 0930 to 0935, that's what that box represents. And I do like to, just kind of take a look and see what, I like to let the first 5 minutes kind of play out. That way, anything before that, it's pretty much gambling, pick a direction and hit buy or sell, but I don't really like doing that. So at least having a 5 minute opening range to kind of, you know, you can use it as a reference. And typically, not all the time, but typically, if you get a close above, for example, if you get a close above with a fair value gap, close above that first 5 minute opening range, you're going to go bullish. Or at least, for 20 points, you can typically get it, but um, that's not a guarantee, of course. And I was looking for it here, but I ended up not taking any trades. Okay, so I'm looking here to take my first position. We inversed the bearish fair value gap, so I'm looking to go long. And as you can see, I hit the buy button right there for one contract, and I didn't really particularly like the reaction, and I just wasn't confident in it. I wasn't willing to sit through any drawdown to make any gains on it, so I exited quickly. So I'd already tried to go on another long. I exited out. And here, honestly, I'm just a little bit confused as to what's what. Honestly, I'm bearish on the day. I really wanted to go short, but obviously there was that fair value gap there in the way. I really needed it to get inverse. It did not, so I exited out and I went long. So I switched again. Admittedly, not very convinced, not very committed in any of these positions, but here you can see it basically it took out it swept the high to the left. I was like, dang, man, it's probably going to go short now. But I stayed in it and just, I was thinking it's going to make a new high, which it did, and took my opportunity to get out. And again, come back after 10 a.m. candle close. And again, I'm looking to go short. I'm really bearish on the day. I think we've displaced high enough. We've taken out enough liquidity above us, and I'm just basically now I'm looking for shorts. So here I'm just setting up. I've got a stop entry already placed, just ready to move it up as I get my entry model, which we got right there. Got it nice and close, and took my position at that candle close. 20-point stop loss. I was really kind of thinking, just going to let this run, kind of set and forget. But those are pretty big targets. And I just was really, wanting to make a bit more money. Unfortunately, it's probably not a good idea to be trading P&L like this, but these are PA accounts, and I'm looking to capitalize this week as much as possible and try to get over that buffer threshold. I am copy trading between accounts as well, so I'm actually trading two accounts at once. So it's definitely affecting my mental state, as far as, if I'm exiting early, if I'm letting things run or not. So honestly, I just was interested in taking a few dollars out of the market today with what I had. So I got up to about 300 and something dollars, 340 bucks, and went ahead and just exited right around 200 or so. And that was my day. Hopefully you did well. Thanks for watching, everyone. Take care.